So good morning, good afternoon, good evening traders, wherever you are in the world. Victorfx here today with another banging video. Now in today's video we're going to be looking at the types of Forex losses. As you can see here, I just marked out a loss. I didn't take this trade in any way, shape or form, but I'm just here to tell you the types of losses. Now today's video we're not going to be looking into anything technical, so we're just going to be looking at Forex losses and there are types of different Forex losses. Now imagine this was a perfect trade that I took because of something crazy, maybe a trend line or something, trying to buy this trend line, and then I ended up in a loss. This way, as you can see, I ended up in a loss. Normally this is not my trading strategy, but this is just to purchase or to show a loss. Now first of all, if this was according to my strategy, there's a name given to this type of loss. Now imagine, since I just lost this trade, I just go in and try to sell this market this way without checking any of my strategy, and let's say this market rallies up against me this way, it also has a name for a loss. Now I'm not here to show you all the whole technical sides of trading. I'm just here to show you the types of losses, and you should also evaluate your trading by using a journal. For example, you can see this is a journal right here. Each trade has a journal, and you can see the images of each trade that is being taken shown here. Just as you can see, this is a good loss. And if I open it up, you can see the loss here. Just journal your trade so you know the type of losses you make the most. Now we're just going to jump right into the type of losses. Now first of all, I said I don't want to spew everything technical at you. I know a lot of you already have ideas of the technical analysis part of trading. Now we jump right into the types of losses. The first type of loss that we can account or your account is a strategic loss. Now what is a strategic loss in Forex? I know a lot of traders have not spoken a lot about Forex losses. They just like, oh, you learn from your losses, learn from your losses. Now the strategic loss is a type of loss that you don't learn from it. Okay, for example, if your strategy says to the T that this is a good type of a good type of trade that you must take because of this trend line, why not you take the trade and you take a loss? It is a strategic loss. It is according to your trading plan, and you are not doing anything crazy. A second type of loss, however, is the type of trade losses that you have to be learning from constantly. Now this is losses that are from random or psychological losses. Now these are just random losses, such as this loss here. Maybe you are trying to FOMO into this sell, and you just want to make back the money you lost from this buy, and you ended up taking this sell, and market takes you out. This is going to be a psychological loss, or um a bad loss. So it's a kind of loss you have to learn from, you have to refrain from, and there are ways to be able to avoid it, which is going to be the next point we're going to go into. So random losses, psychological losses, which are not in line with your strategy. The first loss is the one with your normal strategy. For example, if you have a good strategy, a trend line strategy, as I've explained to you guys, and you take a loss from using your strategy, following your strategy to the T, not changing your perspective because of what trader A, trader B is saying, you're sticking to your strategy and you take a loss, it's going to be a strategic loss. You don't have to learn from these losses because what? They are in line with your strategy. If you want to learn from the losses, that means you want to change your strategy entirely. But if you're still with the same strategy and you believe in that strategy, in this consistency of the strategy, this is not what a bad loss. Okay, now the other loss is what? The loss that is not in line with your what account. Now how can you avoid such losses, if I may say? Now you can see how to avoid random losses. The first thing is what? To show up to analyze. Now what does that freaking mean? Now for example, you're looking at this EU market, and you come up in the morning to look at this market to see what to take in this market. Now for example, if you were looking at what was happening and you saw that, oh, my trend line strategy is lining up, oh, it's looking good, you are not here to take a trade, you're just here to analyze, and opportunity jams you, and then you are able to see what your trend line strategy. Now what do you do next? You take the trade. You take the trade for your trend line strategy. If this does not show up, maybe you come in the market and something else very random just happens. Maybe a break high, break low, and it's not in line with your trend line strategy. What happens? You leave the trade and walk away. Now some traders come to the market with the perspective of, oh, I'm going to make $500 today. What if the market doesn't give you an opportunity to make $500 today? Now if you're talking about an edge in the forex market, let's say an edge is E. An edge is only what? Playing parts of when your strategy presents a setup. So a lot of traders are just going to come on, take any random trade that is not in line with their setup, and that is why most times if you check your backtested trades, you are 100 times more profitable on your backtested trade as compared to your live trades. Why is that? Because when you come to the live market, you don't wait for that good setup. On the backtesting charts, you are usually very fast. The charts are playing immediately and you're able to see the levels you get into. But in the live trades, you will not be able to see those you won't be able to wait for the particular setup to set up because you are in a rush, you want to make back a loss, you want a revenge trade, you want to pay your house rent, and so on and so forth. So that is why you have to stick to what your strategy. You show up to analyze, do not show up to take a trade. Just take it at the back of your mind that, oh, I'm coming to today's session just to analyze. I'm not here to take a trade, I'm not here to do anything crazy. And that's how you should follow it up. So show up to analyze, do not show up to trade. Do you have an edge? Okay, how many times does your edge set up? Now that's just what I say. Do you have an edge in the market? If you just showing up on the market every day and have a buy sell, buy sell, buy sell, buy sell, you don't have an edge in the market. You're just gambling, and you don't most likely don't have a trading plan. If you have a trading plan, there should be rules that should be met, almost like an algorithmic trader. That's the person that follows step by step rules. That's you should check how many times does your rule set up in a day. How many times do you get a setup? You should check that, and when your setup shows, you do what? You attack the market, you play big or you play small, depending on your risk management strategy. And if that loss, you have a loss on that, it's not bad. That's going to be categorized as a strategic loss, and you just walk away from the market and come back the next day to what? Analyze, show up, analyze, show up, analyze, show up, analyze. And imagine you're taking only good trades from your good analysis. The way your backtested trades are looking, you probably will be the richest trader in the world or in your country, wherever. So, in conclusion, I am just saying that there are two types of losses. It doesn't matter the loss you are making currently because everybody has to learn along the way. Psychological losses. I know a lot of Forex channels, they are not going to show you videos about psychology, trade management, and I'm trying my best to show it up here in this channel. They're just going to show you charts, they're going to show you trading view, break and retest, SND, smart money concept, or whatever the fuck you guys are trading right now. So you should just try your best to limit these random losses by making what a very good trading plan. I'm going to make a video on how to make a trading plan, how to make a journal, and how to be profitable in this forex market, yeah, without any technicals. Obviously you should first of all be sound psychologically. Obviously you should also take your technical analysis very, very good. I know a lot of you already have your technicals in check, so the most thing you need is what? Psychology. Okay, so try your best to reduce the random losses, and don't be angry at yourself for taking a strategic loss. Don't be angry. You just walk off from the charts. This is not your day to take bread. You come back the next day and you kill the market. Now if you want to learn more educational contents about forex, psychology, or even analysis, yeah, I'm going to start posting analysis as soon as I can. I'll be able to do that efficiently. Okay, so join this channel. On Sunday we're going to be dropping the market outlook for Euro USD and also for the forex market. Okay, so thanks for watching.